Chapter 3, Adjusting Entries. Before you proceed to this chapter, be sure the trial balance from Chapter 2 check figures are correct. To do that, you want to go to your Reports, Accountant and Taxes, and click the trial balance. And this may be starting with January 1st of last year or December 1st of last year to December 31 of last year. Once you have determined all of your individual balances to be accurate, then you can proceed to this chapter. You can close off of this screen. The purpose of this chapter is to bring the account balances of the affected accounts to a current balance because of the lapse of time. Note that adjusting entries are not correcting entries. All your adjusting entries will be dated December 31 of last year. Remember, if you have been recording your transactions in the beginning of the year in January, now it is the end of the year, December 31, some of the account balances are no longer current. Therefore, you need to prepare adjusting entries before closing your books. The accounts affected are an income statement and a balance sheet account. If these accounts are not adjusted, your financial statements will not project the true picture of what really had transpired in the operations of the business for that particular accounting year. So to start, I will show you the first example and you can complete all the adjusting entries for December 31. So to illustrate, we're going to company. You make your general journal entries and date this December 31 of last year. We will do entry number 7 as our reference number, and this is about the medical equipment that has an estimated useful life of 5 years and an estimated residual value of $3,000. You were given a check figure of 650, but you can determine how that was arrived at by using the straight line formula of depreciation. So to start with this, there is no entry but to debit the depreciation expense account. So what you have to do is on the first row, you're gonna look for your depreciation expense. Remember, this is for the medical equipment, so look for that ME medical equipment depreciation expense under the expense account, and your amount is $650. Enter your $650 and under the memo you can write a description that says to record the year-end adjustment. On the next row, you have a credit to accumulated depreciation. Identify the asset, which is the medical equipment, and the amount and the memo will carry forward. You can save this and go to the next one. So you click Save and New and complete the rest of your adjusting entries. Once you have verified all of your adjusting entries, when you save this, you can go and close this and determine whether your trial balance as of December 31 is accurate. And this is how it would look like. Your individual account balances must match your individual account balances in the chapter as of December 31. Determine if they all match, not just the bottom line, but the individual account balances. Once they match, then you'll be comfortable to move on to the next chapter.